Hey everyone, welcome to the video. Good morning, good afternoon, good evening, wherever you are in the world. I'm here to do a real quick video on sizing a trade, discussing just some very simple things. And before I get into it, of course, everything I say here is not considered to be financial advice. This is my own personal views and opinions. I'm not a financial advisor. But I'm going to be sort of explaining some of the things that I like to look out for when I'm entering a trade and when I am, managing risk. First thing I'm going to talk about is sizing your trade. So, of course, first and foremost, and if you've been on the Discord for any lengthy period of time, you know that some of the things I always discuss in great detail is that you shouldn't ever go all in on a trade. So if you have $100,000, you shouldn't go out and buy $100,000 worth of Bitcoin, right? So you definitely need to worry about diversifying your portfolio. And this is just investing 101. And when you're sizing in your trade, it's important to, kind of understand how much you're willing to risk, how much you're willing to lose if you're wrong. And so that goes into your risk versus your reward. What is your stop loss? What is your target going to be? And you should never enter a trade blindly. You have to know what some of these numbers are. So there's a couple things that I like to pay attention to when I'm entering a trade. I like to pay attention to market geometry. I like to pay attention to Elliott wave theory a little bit. But more importantly, I like to take a look at moving averages and see where we are in moving averages. So all of these different things are all just data points. So you have to understand the data that's underlying to determine what your overall trend is going to be. We're looking at Ethereum right now here on the chart. And by looking at this chart, I can see a few things. I can see here in this range, I can definitely see that we had, some upward momentum. But prior to that, what did we have? Prior to that upward momentum, we had a huge gap. We had our 21 exponential moving average, which is what I like to pay attention to down here. And then we have our 50. I'm sorry, this is our 10 simple moving average. Um, But at any rate, we've got these numbers here that are way far apart from each other. And we have a cross, we had a bullish cross. So at this point, I'm seeing that the overall trend is going to be moving up. But that doesn't really help me have an entry. It doesn't help me have an exit. I don't really know where things are going. It just has an indication that things are going to go up from this point right here. And for all intents and purposes, we did have a move up. So again, we had the cross right here. The price was about right there. We had a drawdown of about 1.5%, but ultimately we did have an increase in price of about 4.6%. So that's good, but we didn't know where to enter a trade. We didn't know where to exit the trade. We just had an indication that things are a little bullish. We did see, down here we saw our support starting to form before we started to move up. We had a rejection here on this moving average, and then we were able to close above, and then we continued to see support up here until we didn't, right? So we had our first sign of weakness right here where we actually had a closure below it. We were able to pop back up, and then we started to kind of break down. We had, a lot of movement between the moving averages. Finally tried to close above, and then we failed, and then we just completely just rolled over. But still, this doesn't give us a good indication of where things are going to go and where things are going to reverse. Moving averages are a good lagging indicator, which what I mean by that is, we had a little bit of a lost opportunity here. So we had a spike all the way up to a little over $204, almost 205, and then this rejection we saw at 198.50. And although that's only a couple dollars, depending on how much capital you're working with, that can be a decent amount of percentage. So a couple things that I look for. Market geometry. And I talk about market geometry all the time. So a couple things that I see here. We definitely saw a trend line forming here, and then we also see a trend line forming here. I like to pay really close attention to market geometry. Once we saw the breakout here, I know that we're going to have more of an upward move because once these patterns and these formations eventually break in one direction, chances are pretty good we're going to continue moving in that direction. So instead of getting into the trade at the cross, which was approximately in this range, we could potentially get into the cross down here, and we could have gotten a lot more profit. We could have gotten a lot more of this swing. You know, nobody is going to time it perfectly and open the trade down here at 173.60 and close the trade up here at 204.80. That's just not how things work. You're not going to be able to do that. So these are, these are things that I do tend to look out for when I'm making a trade. Right now, if I'm taking a look at the charts, I'm seeing that we definitely have some resistance in this range here. We tried to close above it, but we got rejected off of that. This was that big spike yesterday. And if I look at the Bitcoin chart, you're definitely going to be able to see that this is something to be concerned about because, again, going into Elliott wave, what I'm seeing here is a formation a little bit like this. And when I'm looking at a chart like this, let me just kind of zoom out a little bit here and move my way into this and take a look at a different trend line that that potentially is also something to pay attention to. So looking at these, again, looking at market geometry, it really depends on how far out you want to go with your, with your analysis. You know, how long is your trade going to last for? So the time frame does matter a lot. I'm looking at an hourly time frame, which is pretty short. This is going to be something where you're going to be trying to get into a trade and out of a trade more than likely that day. You're not going to be looking for a multi-day trade. You're not going to be looking for a multi-week trade. This is something that you're going to be wanting to get in and get out of. So what we see is we have one touch, so we could see this as an A, B, C, D, and then we're going up for our E. Chances are, I would say fairly good. We're going to go back up to 195. But then at this point, this is going to be where I'm going to enter in a trade. And I'm going to be looking to short Ethereum at this point. So based on market geometry, you are going to be looking at a 5-wave structure, more commonly referred to as an ABCDE pattern. So again, you have your first touch is your A, and let me just go ahead and point that out where that is here in TradingView, ABCDE. So you've got starting from here, and then you've got your A, B, C. We didn't touch here, but we did touch down here, D, and your E. Typically, your E overextends outside of it to create, a so-called trap. When we get here, your stop loss is going to be basically where the top of your C is. So you're going to want to get into this short trade, or you're going to be looking to sell out of your position, somewhere in this range, right? We don't know where this range is going to end because we haven't gotten there yet. It wouldn't surprise me for us to kind of get up to this level about 196.50 or so. Stop loss, you're going to want to pull that down. You can see my horizontal. I'm going to be stopping down here where the C is at. So right here, we shouldn't penetrate that zone. That's going to be where we're going to be looking to manage our risk and get out of the position. Now, where are we going to go from here? If we're looking at this as a bear flag or a bearish pennant, whatever you want to call it, right? This is a symmetrical pattern where we have a definite wedge that's forming here. We're getting closer to the end of this. But what we tend to see, and I'm gonna keep this as simple as possible, but I do have a more technical tool that I use for this. I'm not a fan of drawing a line to determine where this wedge is and then pulling on the breakdown of it, right? Although that is something that people do. And I had mentioned on the Discord just a few days ago, you're going to want to be targeting somewhere between $140 and $160 on Ethereum. Depending on where we break down, this is going to have a target of approximately $147.15. This is where I would be looking to close out of my short position. So again, this is down here. We're looking at a 25% increase in our Ethereum holdings, or a 25% profit in our short position for a mere 4% risk. You're going to risk 4% loss for potential 25% gain. You could look at this as gambling. You can look at this as something else if you'd like, investing. This is a speculative market, and we are in for wild rides. But the target here, based on this flag alone, we're looking at a 25% reward for opening this trade at about 196.50. Cutting our losses, again, we're cutting our losses here at about $204, $205, right? It's never fun losing money, but every piece of entering a trade is knowing when you're wrong. This trade in particular is based on this wedge. And based on this wedge, I know that it is okay for us to overextend out of this trend line a little bit. But I also know that it is not okay to penetrate this touch here. We had touch here, and then we're expected to touch or overextend just a little bit. But I do not want us to penetrate where the top of this C wave is. And again, with this being a beginner video, I do want to talk a little bit about what these candles mean. All indicators that you have on all of your charts are based on just a couple things, right? There's not a whole lot to this. You have your open price, your high price, your low price, and your closing price. So based on a single candle, and I'll just zoom in a lot here. So we have our open price. Let's look at this candle right here. Our open price and you can see at the top of the screen too, open price is 188.65, right where my cursor is. Your high price is the highest price it was in that particular candle, which was $191. Your low price is, you can see the wick down here if I go off of the candle, you can see the lowest price it was $187.60. And then our closing price is right here at $190.85. If your closing is higher than your opening, you have a green candle. If your closing is lower than your opening, you have a red candle. And the high and the low determine where your wicks are. You can call them wicks, you can call them, I've heard them called, numbers of different names, but I call them your wicks, your candles and your wicks. The candle body I refer to quite a bit. This is what determines whether you have a bullish engulfing or if you have a bearish engulfing candle, right? So that sometimes is used to determine what your trend is going to be. I like to determine your bullish and your bearish engulfing candles on a much higher time frame than a 1 hour. I like to look at daily or weekly or maybe a 3-day time frame when I'm looking at this. But that's one piece of data that takes into account some of these technicals that we call our indicators, right? Indicators are based on price action, and it's based on the volume. Because, at the nuts and bolts of everything, all you have are just numbers that make up the price and volume that makes up the price. How much buying pressure was there? How much selling pressure was there? If I saw this candle that was red here have more buying pressure than selling pressure, well, one, I've got a pretty illiquid market. I've got something that has very thin order books that don't really allow the price to go up much, but allow the price to just fall, free fall. And a lot of what you'll find here in the crypto atmosphere is, things are not as liquid as we would like them to be, which is why you see the wild swings, which is why we have an opportunity to make 25% on this trade. Because, you have bulls and you have bears, and I'm not going to get into, what that is. You just basically have buyers and you have sellers. And if you have not a lot of buyers and you have more sellers, it's going to allow the price to drop very fast. But on the flip side, you have people that are seeing the same things that we see. Technical analysis works because it is what the majority of the people out there use. Right? A lot of people do see us consolidating and us getting smaller and smaller. Eventually, we're going to get to a point where things are going to rip in one direction. Right now, I'm expecting this to rip to the downside, and I might be wrong. But at the crux of it, you have a flag that's forming in an already downward formation. So what that means is chances are pretty good this is going to be a continuation to the downside. You have continuation patterns and you have reversal patterns. More often than not, these patterns do tend to continue to the downside or to the upside if this is a bull flag, right? But as you can see, if I move to say a 4-hour time frame, this is continuing to move to the downside. This does not look like it is going to continue to the upside. Okay, so this is important. This is important that this pennant that is forming here does look to be a bearish formation because, heck, we were at over $360 on June 26th, back when Bitcoin hit 13,800. And we have basically started to move down, and we are continuing to move down. And this formation right here, which we are consolidating in, looks to be a continuation to the downside. And this target, just for the record, as we start to talk about market geometry, let's just talk about where this target actually sits. Let's look here. We have a high, a low, and now we're getting ready to go back and test that again. This is a valid target for this flag. We're here to target about $145. The target technically is about 146, 147, but we are looking here for this target potentially to touch $145. And that was resistance here, support here. This was important support. This was our last point of support before we started to skyrocket. Well, now we're getting ready to go back and touch it again. And if I had to guess, we're probably going to touch it and we're going to fall through it. That's just my gut reaction. So I would not look to buy a falling knife. I would look for things to start to reverse. And for things to start to reverse, if you look at our red moving average, and again, this is a daily 21 exponential moving average. If I move to a daily time frame, you're going to see these, this line right here. If I'm looking at the daily, we fell through it. We've had resistance, 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 and now we're far, far away from it. We're continuing to fall, and we are below the 4-hour 21 exponential here on Ethereum. And let me just go ahead and trash some of the drawings that I've got on here. We are below the 4-hour 21 exponential, and we basically had a bearish cross here when we had an attempt to cross bullish, and we had a complete rejection, which has taken the price farther and farther south. So again, some things that I would be looking for here on Ethereum. We have our high up here, and then we have basically what appears to me a very strong trend line that is holding the price down. And potentially, you could see this as a falling wedge pattern. That could be, pretty important. Now, what do we see here? Again, we're looking at that $145 mark. We're seeing our price that we could have a rejection up here, coming down to here, and right around there. Oh, that's $148.55. Typically, these do tend to come in waves of 3. So you've basically got the potential for us, and again, this is also to be counted as an A, B, C, D, E. From up here, you have your A, B, C, and our rejection, so our reaction, that could potentially take us down here for this to be recounted as now resistance. So that's be about $180, and then take us back down here, back to about $140 before we eventually start to move up. Definitely there's a lot of other technicals to pay attention to. If you take anything out of this video, it is that market geometry is really a big piece of it. You want to identify your support and your resistance lines. And again, very clear lines that we see here. We do see that there is going to be some support in this zone here. It was resistance here. We tried to break through it, but we failed. We broke through it. We had support. Then it was support here again. Now we also have right here, we have our current support, which was our resistance here. We had a front run here. We had resistance here. We broke through it, and then we had a front run to move up. And now we are finding this as our support. 180 bucks is very important support for Ethereum. I do think it will ultimately break down, and we will reach this support zone again, which again is about $150. Maybe we'll go a little lower. These are important areas to pay attention to. But again, when I talk about sizing a trade, so sizing a trade, this is important when we're talking about not going all in on a trade. You are going to want to determine how much you're willing to lose, how much you're willing to risk. So if I have $100,000, I'm not going to go $100,000 in on this trade. Even though the risk to reward is pretty good, I don't want to risk losing 4% of all of my money. I want to only risk losing 4% of a portion of it. So you may only want to enter in about 5% of your capital, maybe 10 or 15% of your capital. What that's going to allow you to do, it's going to allow you to potentially layer in. I'm not a real big fan of dollar cost average. Primal, that one's for you. However, it is important for you to know when you're wrong, cut your losses, but don't lose that portion of your entire portfolio. It will allow you to enter in a trade somewhere else to diversify. You might want to enter in a coin trade on Bitcoin and Ethereum and Chainlink. You may want to enter in trades on all of these different assets, but you don't want to go all in on one trade, right? Because a lot of these things are based on USD value, but remembering that the underlying price is based on Bitcoin. I don't care if you are a Ripple fanboy or if you are an Ethereum fanboy, everything is based on Bitcoin. Bitcoin is the king. So if Bitcoin's price goes up, your other altcoin prices like Ethereum, like Chainlink or Ripple, they're going to go up as well. But the underlying price is based on Bitcoin. So you are going to be wanting to pay attention to all of these different scenarios because, we see this price in a falling wedge, but let's just take a look and see what Ethereum is doing versus Bitcoin. ETH-BTC looks awful, right? We saw that the price is consolidating, but Bitcoin is performing fairly well right now. So even though Ethereum is struggling, you have Bitcoin that is holding the price up. Now, if Bitcoin, tends to fall through the floor, then this trade that I discussed last week, has more of an opportunity for us to do our bearish retrace up here and have a little more of an appreciation on the Bitcoin value of Ethereum. So you do have to pay attention to all of these important things. So again, the video that I did last week talked a little bit about bearish throwbacks, bearish retraces, but you have to know when you're wrong and you have to get out of the trade. When I was talking about this trade last week, or I guess rather it's been a little longer than that. This has been about a little over a week since I talked about this trade. I said the importance of knowing when you're wrong. I set this stop loss, which did not trigger, for the record, based on this candle closure. If I'm looking at this as a pivot, and we're talking about reversals, we saw an impulse and then a throwback, but we didn't penetrate this low, which is why I decided that this is where I was looking to enter in the trade. And I was looking to have a stop loss here because if we're going to have a continuation to the downside, this low is going to be penetrated. I saw this as basically an accumulation area, and basically it looks like the accumulation is continuing. I would also kind of take a look at this as a rejection of our 21 exponential here on the 4-hour, which we saw on the USD trading pair. But you take your stop loss at basically what you're referring to as your pivot. That pivot is important because that has to be where you stop out. You stop out on the pivot. Don't hold on to hopes and dreams that things are going to continue to the upside, because fact of the matter is, let's take a look at the weekly chart here on Ethereum. You have so much room to go down. You have so much room to go down. Let's take a look at Ethereum versus Bitcoin on an exchange that has a little more history. So take a look at this, right? So let me just remove some of what I've got on here. You got to use this as a stop loss because if you don't, look at how much you are going to potentially lose. So your stop is right here. You could go down, look at this, this is 44% loss. If you have $100,000 and you're risking all of it on this, you're going to lose $44,000 instead of potentially just losing, you know, 1,000 or $2,000, right? You got to know when you're wrong. And this is, one scenario. We could potentially go all the way down here, a 58% loss. You're going to lose more than half of that money. You have to know when to get out, right? If you bought up here and you're FOMOing in, or if you're missing out, if you're trying to get in on a rise, well, you're a fool for not selling and stopping out when you break down through one of these moving averages. You need to cut your losses. But the more important thing is to just get your trade set up and know when you're wrong. And maybe you let your profitable trades go. If I got into a long position down here, I probably would have targeted this 21 exponential moving average. I wouldn't have made a whole lot, but I wouldn't have lost anything. Um, but maybe I would have taken this trade and decided I'm just going to let it run. And then once you get up here, don't be greedy and you need to get out, right? So it's important to have a good trade setup, but it's also important not to be greedy. If you do have a good runner, take some profit off the table. You got to pay yourself. So I know I talked about a lot of different things here. More than happy to go into detail. I know I've been talking here for about 25 minutes, but I'm more than happy to go into any detail on further videos. But sizing your trade, setting your stop losses, those are important. Market geometry is important to know when you have a breakout or when you have a breakdown. Those are important things to pay attention to. So hopefully I helped you out a little bit. More than happy to discuss any of these inside of the Discord. More than happy to talk through any of these with you guys. So hopefully you got something out of it. Feel free to leave some comments. If you need an invite to the Discord, just send me an instant message or a direct message, and I'll be more than happy to get that to you. So hopefully y'all have a good day.